Hello, I'm Carolyn Herbert from the Finance News Network, and joining me from the Altrinsic Global Equity Fund is portfolio specialist Simon Blanchflower. Simon, welcome back.
It's great to be back.
Simon, for those unfamiliar with Altrinsic, how is the fund constructed and what's the stock selection process?
Well, it's fairly straightforward. We search the world trying to find a handful of high conviction ideas. We're benchmark unaware and address agnostic, so we invest right across developed and emerging markets. Our approach is intrinsic value focus, and we're trying to find ideas that trade at discounts to their intrinsic value.
So how has this process enabled you to find value in the stocks that you select, and can you give us some examples of that?
Yeah, so we invest right across the value spectrum. We don't compartmentalise value. So we invest in companies that have higher levels of financial productivity, that year on year are generating sustainable earnings characteristics. But we also invest in companies where profitability levels may be currently depressed, and we're looking for recovery or improvement in those levels. So companies that are more, higher financial productivity are companies like Tokyo Marine in Japan has done very well over the last year, targeting higher ROEs. Also, companies like General Electric, Time Warner, very high quality companies that are focused on, ROE generation for shareholders. Down the other end of the spectrum, more cyclical companies or those that are perhaps growing from a lower base, things like BioMarin in the healthcare sector. We also invest across the energy and materials sectors, which are of course more cyclical, and even companies like Suzuki, for example, which we've owned recently, which has also done very well in those more sort of profit recovery, improving profitability scenarios.
So taking a look at the current market conditions at the moment, what's your take on the market volatility, and do you see this as a buying opportunity?
Well, last year we certainly concentrated the portfolio into our higher conviction ideas moving into this period of volatility, and we've actually outperformed the market so far this year. But it has enabled us to look at areas that we were interested in before, but perhaps were too expensive. So biotech, for example, is an area where there's been a big sell down, more so than the market has sold down. So that's a particular area that we've been looking at recently and bought a couple of positions there.
And finally, Simon, how is the portfolio positioned to capitalise on these opportunities?
Well, we're bottom-up stock pickers, as I mentioned earlier. But broadly speaking, we're quite underweight the US. Overweight Europe, overweight Japan. From a sector perspective, quite overweight financials and overweight healthcare as well, but underweight more of the cyclical sectors, so quite underweight industrials, materials and energy, for example. The portfolio also has a good mix of higher quality companies, those companies that have got higher sustainable financial productivity, as I mentioned before, but also a good range of businesses that have specific business drivers, quite idiosyncratic and good diversifiers within the portfolio, particularly in these volatile times. Also, perhaps just to mention quickly on the innovation side, particularly healthcare, with the developments we've seen recently in gene sequencing and how that's leading to innovation in producing new drugs.
Simon Blanchflower, thank you for the update.
Thanks for having me here today.